Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Miami at the Exchange ETF conference. Joining me for this segment, we have Bibb Strench as a partner at Thompson, Hine. We're going to take a look at the evolving regulatory ETF landscape. We'll also take a look at a couple of the other issues that the SEC is focusing on. Bibb, it's great to have you with us. Welcome to Trade Talks.
Thanks, Jill.
You got it. You spent some time at the SEC. How has the ETF regulatory landscape evolved since when you were there?
I think there's been significant changes, around the conference, even outside of the legal circles. People are talking about some of the regulations, and it's really more of a shift from when I was there to consumer protection and also minimizing risk and more of a bank-like regulator approach than I saw when I was there.
What other issues are they focused on?
Well, probably one of the biggest issues is the name test proposal that they've come out with, reproposal, as well as they've come out with ESG regulations.
Right.
And why it's significant is that it really has impacted product design, and it may, prevent certain types of products. Specifically on the consumer side, they propose a very granular rule, almost like if you're advertising orange juice, what percentage of the beverage has orange juice? Somewhat the same approach with ESG. How green is your ETF, including potentially providing tables that show the carbon emissions that the companies that you invest in. So quite dramatic.
Well, it is interesting too because ESG, of course, you run the risk of greenwashing, right? Because we've seen basically multiple industries monetize ESG, right? And then there's lack of standardization because it can be so subjective. So are they looking to kind of put a framework around that so it can be quantified?
Precisely. Which is, a big shift because securities regulation normally is buyer beware, and as long as you disclose it, the SEC is not going to tell you specifically what you have to disclose. In this case, they are. They're being very detailed in what they expect you to talk about your ESG fund.
Yeah, that sounds like a good thing, right? I mean, it's progressive, and it's good to put that framework around it.
It's a good thing to a certain extent. I think, this industry's always been about innovation. And regulation, the more regulation has traditionally stifled innovation. And it's also led to very subjective discussions between an issuer and a regulator. Whereas when you stick to the law, it's usually more black and white. So it's caused a lot of give and take, maybe potentially delayed some product launches. But you're right, it's a laudable goal of the SEC.
Are they scrutinizing fees?
They are. Around this time last year, an SEC official said, look, we can bring lawsuits against ETFs and funds that charge excessive fees. It doesn't just have to be the shareholder. And they've been asking lots of questions to fund complexes. So another kind of buzz around here is like, all right, they've gathered all this information, are they going to actually take action? And it's all kind of ironic because when I started, funds had 8.5% loads, and especially driven by the ETF industry, it's brought fees down tremendously, saving multiple billions of dollars for the investor. Yeah,
well, also another big trend, mutual funds going into ETFs as well. That's another fee savings there in itself.
Exactly. Now, on the flip side, fees are they're the lubricant for the ETF industry. They need a certain amount of fees to come out and be viable. And at the same time, these rules I just talked about are increasing compliance costs. So the cost of the ETF provider is going up, and then at the same time, the SEC is scrutinizing the fees they charge. So it'll be interesting how it turns out.
It certainly will be. Never a dull moment in this industry, that's for sure. Bibb, appreciate the insight. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.